Well, happy weekend, Maverick Currency traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and this is the Currency Room. And wow, what a week. I've been doing this now for 28 years, and this week goes down in history as one of the craziest weeks I've seen in my 28 years. So let's jump into it. In this session, we're going to go through the news of the week. We're going to take a look at all the currencies, score them from +3 to -3 on trend and on velocity. And then we're going to take the strongest, pair them up against the weakest, and that's where we're hunting.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the Apply button in the video description. Let's get ready for next week.
We are 2 weeks away from our 15th annual Maverick Trading Summit. It's in Vegas. I know that a couple of you have reached out and said, hey, I don't know if I can go yet. Can I wait to the last minute? Yes, there's still a few spots left, so I don't see any problem with that whatsoever. And we're going to be talking about using AI. The whole 2 weeks is about using AI to do all sorts of cool stuff. So really excited about it. All right, let's jump into last week. Wild swings. And we had the largest single up day since 2008. And remember what happened was in 2008, the economies were crashing. It was right after Lehman Brothers went bankrupt. And the whole financial system was crumbling. And then Congress came in and they put together the TARP program to rescue the banks. And we had that huge rally. Just think about how intense that moment was. That's how intense this moment was on Wednesday. It was just absolutely bonkers. We'll take a look at the charts. And just the candle is one of the single biggest candles you will ever see in your trading career. With that being said, look, volatility is super high. Just super high. And we got it because the news that the tariffs were really starting to become a real concern. Again, the markets were falling and falling. The NASDAQ has been down 25% from its high. And then on Wednesday, President Trump came out and said, hey, we're putting a 90-day hold on tariffs. And again, massive short squeeze, massive rally. There was no follow through. And that's what Ankit and I were talking about before we jumped on here, was that the lack of follow through on Thursday and Friday is a little bit worrying. Okay, what do you think about that?
Yeah, absolutely. We get these big reversal candles, and after those reversal candles, we get a little bit consolidation period, but usually that leads to a much bigger rally and a breakout. So I think the extreme intensity that we had on that candle, I'm surprised as it was looking past it, we haven't really broken out those highs yet. So again, this is, I think, it's a lot different. Back in the old times, we had more resolutions versus this time where it seems like it was one of the biggest short squeeze rally. So it's less, it's not like a whole lot of new money coming in, but it's like a lot of people that were very bearish that got stopped out or liquidated on the way up. So I think that's what's telling me here because of that lack of follow through, and it's something that we'll be taking a look at going to next week as well, because it doesn't seem like we are out of the woods yet.
Yeah, totally agree. Let's go through the economic reports for last week. We did get a central bank cut by the RBNZ. They went from 375 down to 350 as expected. I want to point out CPI and PPI out of the US. Now, look, we all don't like inflation as consumers. And so on the surface, these numbers look great. Oh my gosh, we're at 0. And actually, headline CPI was -0.1. You don't want that. You don't want negative inflation. That's deflation. And that is actually one of the first signs of a slowing economy. So these numbers, again, remember, we want Goldilocks. Not too hot, not too cold. These aren't looking like Goldilocks numbers. These are looking like, hey, there's a serious issue with consumer demand. We did get a really nice report out of the UK. Surprisingly, strong economy. The pound went down for the week. So remember, whenever you get good news and the currency goes down, it's a great sign that it is not as good of a news as you thought. So let's go ahead and look at the numbers for last week, and then we'll turn the page on that. We had the S&P up around 5% by the end of the week. Again, at one point it was down 5 or 6%. Just nasty. Crypto bounced, gold bounced. So look, everything bounced back except for oil. Oil's doing its own thing. OPEC is raising production to try to punish some of the countries that have been breaking their quotas to make it very painful for them, because Saudi Arabia is in charge of OPEC, and I think their cost per barrel of oil is like $20, where everyone else is like at $60. We're at about $57 right now for the price of oil. That means that a lot of countries and a lot of companies are pumping oil at a loss. Let's take a look at this S&P chart. And here's this just massive candle. This massive candle was like 10% in one day. But take a look at it. We had fallen 13, 14% in 3 days. This is just what happens when you get volatility. All the moves get bigger. So we had this big move. You would expect that the next candle would be a Harami candle. Harami candle typically hangs out up here in the top half. And then the next day you get an extension or it reverses and you go down. As you can see what we got here, it's not great. It's definitely not great. And when you're just taking a look at the big picture, falls, relief, falls, relief. Nothing has changed in the trend here. There's not one sign here that says, hey, this is the bottom. There are signs here that say this is a bottom, just like back here, this was a bottom. The only thing you could point at was there was a big surge in volume. Big surges in volumes are typically signs of the bottom, where you get massive capitulation. I don't think we quite got to capitulation. Capitulation where everyone is throwing their hands in the air. Everyone on CNBC is yelling and screaming at each other. I don't feel like we got that intensity. Let's take a look at what happened in currencies. The euro and the Swiss franc were huge beneficiaries last week. Swiss franc is just looking like a monster trade at the moment. And the dollar lost 3%. Remember, most of the weeks that we do this, you're going to have one or two currencies that were up or down more than 1%. Take a look at this. We had 5 currencies up more than 1%. Volatility is here, means it's a good trading environment, but you got to be on your toes. You've got to be on your toes. You've got to have wider stops or use pyramiding in order to trade these kind of markets, because there's a lot of whipsawing. And if your stops are too tight and your entries aren't all that good, you're just going to get knocked out on a trade that you were probably actually right on. One thing we're going to talk about here is that the Aussie Kiwi is really the only currency that's following the risk on and risk off in and out of the market. Everything else is doing its own thing. So we're going to be taking a look at that when we get into the charts. Crypto had a bounce. Bitcoin Cash, huge bounce. Ethereum has been the worst one this year, and it continues to underperform. We're going to take a look at the crypto chart, and I tell you what, I'm not all that crazy about cryptos here either. So the markets here are now, again, we bounced off the bottom. But what does that mean from here? This is the 10-year bond. And this is becoming a really big story, and I want to spend a little bit of time on this because this candle kind of changed everything. I don't know if you've gone out and read about this, but the night before the delay on the tariffs came out, this was the candle. So the tariff day was here. This candle right here was a huge reversal, and this came because somebody was selling a lot of U.S. bonds. Now, if you go take a look at who has a lot of U.S. bonds to sell, the number one holder of U.S. bonds is the country of Japan. Now, again, Japan is getting squeezed by tariffs. A retaliation that they could do would be to sell bonds and drive up the price of yields. There's something coming up here in June. In June of this year, the U.S. has, I want to say it's like $8 trillion of bonds that need to be refinanced. So in June, if the rates are really, really high in June, they have to refinance them at higher rates. It'd be just like if you were getting a mortgage and the mortgage was at 4%, and then you're getting a mortgage in June And in June, it spikes up to 7% for some weird reason. And you have to buy your house. And now you're stuck in a 7% mortgage for 30 years. And then it goes right back down to 4% a couple months later. That's kind of the risk and the danger of what's happening. And somebody, and the word on the street was it was Japan. They went out and sold a whole bunch of bonds, created this big run, and that's what caused the president of the United States to say, uh-oh, we can't have this in June. Ankit, did you read much about that? I mean, did you see anything else out there about maybe China doing it as well?
Yeah, I would say that in the last few days, it has all that talk. If you listen to CNBC or any other news channel, I think it's all about the bond market and the treasury market. And, initially I definitely had thought that this was more China, in their own way, retaliating by selling the bonds. But, I think it could be a mixture of China and could be Japan as well. But based on the movements that we're seeing in the bond market, especially in the last 2-3 days, I mean, it's a dramatic shift. We were just a week ago, we were thinking, or prior trades were pricing in like 5 rate cuts for the year. So we went from that extreme level to now this whole opposite side, where people are worrying about the bond yield spiking, and based on that erratic moves that we are seeing in the bond market, that's a little bit more worrisome for the overall markets. And I think that's the reason why we are seeing all these jitters in the currency markets and everywhere, because there is some warning signs that's kind of flashing in the bond market.
And this is the reason why I've had a bunch of people reach out to me and say, Rob, was at the bottom, was at the bottom. And I'm like, no, guys, we're in a period of economic warfare. And yes, people are hitting back. And at any time, these countries can dump a whole bunch of bonds and push these bond yields up to 4.7, 4.8, 5%. They have a lot of power. And I know when the tariffs first started, you thought, oh, the US has all the power. Well, we're starting to see that's not as true as we thought. This could be very, very painful for the US if these countries decide to try to push these bonds up. And let me describe what I mean by push these bond prices up. When you sell a bond, the bond and the yield are inverse. So when you sell bonds, the price of bonds go down and the yield goes up. If they're selling their bonds, so let's say that it was Japan and Japan went and sold, $100 billion worth of bonds. They're bringing that money back into Japan. That's a currency transaction. That's selling dollar, buying yen. And that's why we saw the dollar so weak last week, down 3%, is that we're seeing people say, we no longer want to be long-term bondholders of the United States government. That's going to be some economic warfare. That's why I do not think that this market has bottomed out yet, because this is something that we have not seen in our generation. It just has not been seen. Here is crypto. Look, there's nothing really to talk about in crypto. This is just a long-term downtrend. Is there anything here telling me that it's the bottom? Absolutely not. Absolutely not. So for me, I am not interested in crypto whatsoever. Looking at the schedule this week, we've got some Canadian CPI. Again, I don't think any of these CPIs matter anymore. And frankly, these economic reports become a lot less important because this is all looking in the rearview mirror. This is looking at like March. What was March inflation like in Canada? Who cares? Like, the world has changed violently. I just don't see a lot of these numbers changing. We do have Bank of Canada on Wednesday. They're likely to keep rates where it is. But again, what are they going to say about the tariffs? What are they going to be worried about? We also have got the ECB on Thursday, and they're supposed to cut by 25 basis points. That's widely expected. They've been talking about it, but this is really supposed to be the last one. What are they going to be saying about these tariffs? So I don't think the news is going to be very important. I still think this is all about tariffs, economic warfare, and that means that volatility is likely to stay high. So let's take a look at everything just through the eyes of a chart. And this is where I love just to go into the charts. Everything we just talked about is what I call cocktail talk. It's my opinion, Ankit's opinion, other people's opinion. That's great. But what does the market say? So let's take a look at crypto first. What does the market say about crypto? Well, it says that it is low basing here. So we hit, over 100,000 on Bitcoin, and we're now trading between 76 to 85,000. That's it. Until that changes, there's no reason at all to get optimistic on Bitcoin. And frankly, low bases tend to break down. They tend to break down. There's nothing going on here to get excited about on all these cryptos. Bitcoin Cash, little bit better rally. Okay, short term, maybe it's got another couple bucks in it. Long term, there's no reason at all to be optimistic. Ethereum is atrocious. This thing hasn't even put together a bounce. Just low basing breakdowns. That's all that's happening. This is the weakest crypto out there that we take a look at. Litecoin had a little bounce, nothing great. So look, if you are interested in crypto, please put that interest on the shelf. There's nothing in these charts that are an indication that is anywhere close to the time to buy cryptos here. Take us through some Forex.
Absolutely. Well, let's just start with the US dollar. And I think this is the bigger one, the bigger story so far this week. I mean, that's a massive sort of a return. I mean, the last 3 days, that sell-off is atrocious. I mean, this is a very steep sell-off. And, looking back and, this is the biggest sell-off since November 2022. And at that time, again, we had a lot of things happening with the FOMC. So, something you can kind of note for, I mean, dollar was sideways for the most part. You can see it did not go anywhere the entire month of March. And even in the early April, we did get that drop and then we saw a big sort of a rally or recovery. Now, this thing is looking a little bit ugly. And I think this is has a lot to do with the bond market, as Rob was saying. The whole currency conversion that you're selling the bond, and so I think that's really there's bigger forces in play, and I think that's one of the reasons why if you look at the move, I mean, look at the velocity chart. I mean, this is just a straight selling down. It's like sell, sell, sell. There's just not even any relief rally for the last 2 days. So that's something to kind of note for here. So overall, I think it looks extended to me. I think I would like to see this sort of consolidate a little bit, but the direction is clearly onto the downside now. Now, looking at the Japanese yen, and I must say that I'm not so excited for the yen here. As you can see, why yen is not. I mean, comparing that to Swiss franc, yen is not the one that's moving that aggressively. So this thing is, you can see that's a prior resistance point is now the support point here. Even though we are above the 20 to 50, I just want to point out even velocity is not showing that much strength either. So this is something that you got to be a little bit more careful about. Even though we are seeing a good risk on and risk off sentiment in this one, I think this is the one that's going both ways, where when the market sort of rally a little bit, the yen pulls back. But I don't love the strength in the yen here. I think the yen strength is sort of fading here a little bit. Now, comparing that to the Swiss franc, I mean, clearly this is the winner. This is the one that has been running up and up and up. And we talk about the intensity of the moves. You can go back, and I think this is the one of the biggest move that we've seen in a decade in the Swiss franc. So very unique period where we are seeing certain things that we have to go back 10 years to kind of look at that. So these are big expanded range candles. Now, why Swiss franc is acting as that? Maybe this is just a safe haven play. Along with the gold. I mean, gold is up massive 6% this week. I think this is a flight towards a safety play. And also as the dollar kind of falls out of favor, the question really is that what do you want to buy? And I think right now the money is going to the Europe, and you can see that in the euro as well. Euro is also kind of doing very similar thing. So this is I think we want to take a look at where the money's going. Swiss franc, yeah, and in the euro, that's really where the money's going. Now, usually we take a look at British pound in the same basket, but you can see that it's a total sort of a disconnection that we've seen from the broader market. So this thing is now clearly underperforming compared to the euro. Now, if you take a look at the gilts, I think there was a lot of action in the UK bond market as well, but now they're expecting further rate cuts. So that's again, I think, putting pressure on the British pound. But just looking at the chart, this thing is now clearly fallen out of favor. So I rather trade the euro over the pound. Now, when we take a look at some of the growth currencies, and I think this is where Canadian dollar, you can see that there's quite a bit of volatility, but not as much. Remember how Canadian dollar was the most underperforming currency compared to the dollar? I mean, look at that. It's the other way around. Dollar CAD is down to the lowest level at like in 5 months. I mean, dollar CAD is now below that 140 level. So big transition has taken place there. Now, is Canada out of the woods yet? It's not really. I mean, remember the tariff is still there. In the shorter terms, you can see this is more stable currency, because we just don't have a whole lot of news. I mean, remember how everything was about Canada just a month ago. Right now, everything is about China. So I think Canadian dollar is less at a risk of these abrupt movements or these news, but at the same time, it's not flying off the shelf either. So this is again goes as a better a currency that's doing a little bit better compared to the U.S. dollar. Now, Aussie and Kiwi, and Aussie is the perfect example of that trade war that we're seeing with China. On we had the biggest move you can see when we had the big rally, but you can see that like we had a resolution for this exemption, but the China was not exempted from that delay for suspension. And every day we are just getting more escalation. Now I think it's up to like $125 billion or 125% on tariffs. So we are seeing an escalation instead of a resolution. So that's a big drag on the Australian dollar. And you can see that in the price action here as well. Even though we got that rally, but that rally has sort of no follow through. So it's still in a downtrend. I personally think that I will not be comfortable with the Aussie long until I see more resolution on the tariff front. Very similar to what we saw in the CAD. As long as CAD was in the news, it was a difficult currency to play. But then as soon as the CAD got out of the news, it became much easier. Now, here's the other one. I mean, this chart looking a lot better, and that's the Kiwi. And you can see Kiwi had a bit of a follow through. What we saw on that big candle on Wednesday. This is the only thing that has a bit of a follow through. I mean, overall, it's still in a downtrend, but if you take a look at that correlation between Aussie and Kiwi, I mean, we're seeing. I mean, for the longest part, we've seen Aussie outperforming the Kiwi, and now that thing has flipped, and now we are seeing Kiwis outperforming the Aussie. So I think this is pretty clear signal as far as where the relative strength and weakness is. You look at Aussie against the Kiwi, Kiwi's winning. You take a look at Euro against the pound, the Euro is winning. So this is again a great time to take a look at what's outperforming and what's underperforming, and then based on that, you can make those pairings.
Well, here is the trend score currency board. And look, I think this week breaks down to just a real fundamental trade here. Euro currencies and dollar. I just think that is the number one trading currency. This is where I'm looking. It's had a huge move. There's likely going to be pullback consolidation. I don't think it's a trade ready for Sunday night or Monday, but this is where the money is. This is where the big shifts in money are going in and out. And remember, trends typically last longer than we all think. I'm looking to stay long euro, stay long Swiss franc, stay short dollar. That being said, I also think this is going to be the most volatile place in the market, which means lots of choppy moves, lots of wicks, lots of crazy moments. So you've really got to be good on your entries, and then you'll also need to be a little lucky on your timing, because at any time, anything can come out with news and it can help your trade or blow it up. So that's where all of the energy is right now, is in euro dollar, dollar Swiss franc. As Ankit mentioned, hey, you don't have to trade these. You don't have to go where the craziness is. You can go trade something like euro pound. I do like euro pound. I think that one is. But look, if you're still saying, hey, euro's a little too crazy for me, okay, you can take a look at CAD. CAD against Aussie, CAD against dollar. Again, there's other places to go. Again, dollar, euro, Swiss franc, that's where all the energy is, and that's where I think the biggest moves are going to be next week. But also that sometimes says it's the harder trade because of all the volatility. Stop outs are very quick to happen in case you just get a little bit of bad luck. So let's take a look at maybe some other places we can hunt, but I want to take a look at the velocity score first of where things are moving right here, right now. Right here, right now, all the energy is euro, Swiss franc, and dollar. Take a look in here. There's places you can play here. Again, Kiwi. Maybe playing this against the pound. You're really avoiding a lot of the crazy volatility. And now you're just trading some relative strength and weakness. And then you don't have to worry about tweets in the middle of the night. Now, look, it's still going to affect everything. And that's just where we are in the market. But you can definitely get less exposure by trading things like Aussie Kiwi. Aussie Kiwi is probably not going to be as volatile as everything else if you get a tweet in the middle of the night or in the morning about some new crazy tariff we're putting on. I think that's where you want to hunt, unless you're like me. I love to hunt the big ones. I love to hunt for big trades. So I'm going to be hunting in euro dollar and dollar Swiss franc. But if you're saying, hey, that's not my game, there's plenty of places to go out and make some trades. So let's take a look at a few of those. And I'll take a look at mine. My euro dollar and dollar Swiss franc, and then we'll take a look at some of the other ones that aren't going to be so volatile. So first up, I want to pull up euro Swiss franc. And I'm just looking at this saying, okay, what's stronger? And you can see euro is falling against the Swiss franc. So it's telling us Swiss franc is the strongest currency at the moment. So I'm looking at dollar Swiss franc. We've gone from 88 down to 81 and a half. That's 550 pips. That's about a 7% move. That's a monster move. It's a monster move. Okay. Do I want to go short after something has gone down 7% in a week? Not really. Not really. So I do want there to be some relief. I want there to be some relief, but this is where all the energy is. And if the trend eventually, again, take a look at what happens. We get big moves down, and then we get consolidation. And then we get big moves down, and then we get relief rallies. So I really hope there's a relief rally like this, because I would love to get short. I would love for this to pop up into the 83, low 83s. That would be fantastic to get a pop up in there. Would love to get short dollar Swiss franc in the 83s. If that doesn't happen, we're probably looking more like a base, which then, this trade is going to be a week or two off. Dollar Swiss franc looks great. Euro dollar is going to look the same. Let's talk about trades you can make that aren't the crazy ones. So let's take a look at Aussie Kiwi. So Aussie Kiwi, it's still moving because there's big volatility out there in the markets. But if we take a look at the daily chart, we can see the Aussie is weaker than the Kiwi. We're getting some breakdowns here. Got a nice push down, but a recovery here. Again, this is where I like to get short on these relief rallies. This is a relief rally. We have no idea if this downtrend is going to continue, but what we do know is that trends tend to end longer or last longer than we expect them. We're rallying right up into this area of resistance here. To me, this 108 area looks to be an area to look for a short. Here's the problem. Is short term, the Aussie's still going up against the Kiwi. So I think it's way too early to go short here. I think you got to get a couple of candles, get the 13 SM or EMA turning down, get some relief off the RSI. So again, you can go hunt in areas of the market that aren't going to be wild and crazy. So I think Aussie Kiwi is one of them. Okay, do you have anything you want to take a look at?
I think, Raul, as I'm looking at charts, we're kind of the similar boat. Like, I was looking at pound Kiwi just for that sake, pound weakness. And, it's like we've seen such a big move in the last 3 days, and everybody has that same sort of a question or a comment that, should I get short here, after that big move? And I feel like it doesn't matter what chart you look at, dollar Swiss franc, like you said, Rob, like 7% move. These are some crazy big numbers. I mean, so I definitely understand the hesitation, but I think this is where you just, let the pattern and the trend develop. We talk about energy, and right now this thing has an expanded energy, and after that, we want to see some stability. So we want to see things sort of consolidate a little bit, and I think after that we'll probably see a better sort of an idea where market wants to go. I also want to point out is that while we see things on a technical basis and everything kind of looks good and makes sense, we are still going to be affected by what's happening in the markets and what happens with the news, right? Like we're still sort of depending on, do we get some resolution with the trade war with China? Like, do we get some positive news? Does the bond market really sells off? And then you see more of a reaction from the Fed. Like, I feel like, just keeping that in mind is that we are not out of the woods yet. And, we could easily see another week of some crazy moves. So I think as we go into next week, we want to be, prepared more cautiously, cautiously bullish or cautiously bearish. I think that's how I am looking at this, because things can turn pretty quickly at a very short period of time.
Thanks, Honkit. And I also want to just discuss yen before we break out here. Yen to me is a coin toss. I mean, first thing I look at is yen in these kind of markets, and all of a sudden it's like, I think I could toss a coin and call the yen better than I can. It's a difficult trade here. I think you are probably going to lose long or short on yen because look at this kind of stuff. Oh, buy breakouts, buy breakdowns. It's not going anywhere, but we have big ranges here. So I just think you want to avoid yen altogether. I think you want to be playing in some other places. Anka gave some great advice. Be aware of the situation we're in. Huge risk, but also really big reward. But you've got to be great on your timing. So let's focus on that this week. Let's focus on waiting for those moments, waiting for those areas. And look, and if they don't get there, they don't get there. That's just what trading is. But if they do get there, let's take those positions. Pyramiding works really good here, to where instead of taking your entire position right at first, take a third of it. And then if it's working, take another third. And then if that works, take another third. Move your stop up. I think that's the right way to trade in these big markets, to where you're not taking that big risk right in the beginning on your trades. Thank you so much for joining us. Everyone have a great weekend. Goodbye, everybody.